They say times can get more exciting. I don't know if I guess that's probably very true. I'm Connor McIver. I hope everybody is doing well. I do want to bring to you the Connor with Honor podcast, talking about local real estate here in Santa Cruz Valley. Have some news to share regarding inventory and changes in the market and interest rates, and yes, the adjustable rate mortgages. So I only make that face because I thought and think, maybe mostly thought, the same thing that maybe you do, which, gee, those are the things that maybe caused the issue back when the last foreclosure cycle hit. And I had to be reminded because I actually was so focused on the now and not thinking too much back in the past, which of course has its own issues. But the now indicates that the interest rates now, when they're trying to do adjustable rate mortgages, those loan products are different. I'd remembered back where a lot of those back in the day in the beginning when they first came out, they were stated income. So there was no income verification or much at all in that regard. They really didn't care. They were also 100% loans. So there were two loans typically given. You had your 80%, and then to avoid property mortgage insurance, if it was even really around, it kind of really didn't come about until a little bit later, but there were some loan products that had it. That particular object was gotten rid of by another 20% down loan by a different financial institution. So you had two loans on a property with a junior and a senior note holder or lender on both of them, one on each, right? One at the 80%, one at the 20%. And then I remember those 20% numbers or the 20% lenders, those loan products were a little heavy in that regard. So what had happened was the payback had to be done rather quick, and in some cases there was some type of a balloon note attached to it. Then at the end, that was a requirement that you had to pay off that entire balance in one fell swoop. And for a lot of people, that was a problem, especially because we started to see a tap out of prices back in the day. Once that happened, then people were unable to take the equity out of the house via refinance using that mechanism in order to catch up on that one of those loans. So the foreclosures started. And even prior to that, I believe it was New Century Bank was the first to really topple, and that was back in March of '07. So we saw that fall out as well. They had lots of subprime loans that they had written, and a lot of those loans weren't being taken care of. People stopped making those payments, and then the market started to basically fold in on itself. So that's historically where that was. So if today you're talking with lenders, they're saying, hey, we got this great new thing that you can do. You can only pay interest, or you can pay an interest rate that's going to be locked in, that's going to be less than what normally you would get. And after a few years, that interest rate's going to go up or going to change. It's a different kind of thing. However, Dad always said, and maybe that's why I'm not ultra wealthy, but he liked the security of that 30-year fixed mortgage. But sit down with your lender, do yourself a favor. I might like that. A lot of the clients I work with, some don't. Some want that adjustable. They say, well, I'm only going to be there 7 years max, and it's going to be staying the same for 7 years. So what's the point? That being the case, then well, maybe they have a point. We'll have to see how that plays out. But sit down with your local agent; they'll be able to refer you a real estate lender. If you don't have one, contact me and I will be able to run that interference for you. I'll also be able to give you the top questions you're going to want to talk to your lender about or ask them to make sure that you're not being taken advantage of the loan in the loan department. Now, with regard to purchasing real estate, I'll remind everybody of this as well. Let me throw the date out there, July 9th, 2022. That's when I'm recording this. It's now 11:22 hours Pacific Standard Time, according to Apple time. I just made that up. All right. So moving into this, what ends up happening is as a real estate buyer, you have to pay closing costs. As a real estate seller, you have to pay closing costs. Closing costs are in addition to the actual price of the property. So if you're buying a $500,000 piece of home, real estate, something like that, residential, of course, that you're going to be living in. Typically, we consider these condominiums, townhomes, and single family residences. If that's what you're going to purchase and you're going to be paying $500,000 as a real estate buyer, you could potentially have 3% on top of that, which would be $15,000. And those would be closing costs. You say, well, Connor, what is this? Is that your fee? No, no, no. Connor, me being your real estate agent, as a real estate buyer, I get taken care of by the real estate seller, whoever that happens to be. The seller pays both commissions. The seller is going to pay the commission for the agent representing the buyer. The seller's also going to be paying for the agent they hired to sell their home, condo, or townhome. So that's where how that works. As a real estate buyer, though, you have three things that make up this figure, if we're going to just use round numbers of $15,000 or 1% each. Each fee is going to be these. So it's going to be your part of escrow, your part of title, and then, of course, your lender's fee. Escrow and title are typically set industry wide by pricing. So usually they're pretty much set by the way the home is priced. There's a little flexibility there, but as far as being able to negotiate those fees, I get called by lenders. Oh, we'll give your buyers or your sellers a special deal. It's hard to say if their volume approach to real estate really pays off. Sometimes we see a lot of delays with that. Dad was always too poor to buy cheap things, kind of a philosophy. But who knows? Maybe they fixed it. And I would talk to them on your behalf if you happen to come to the table. Say, Connor, I want to sell my house, or because usually the seller selects that service of the escrow company. So it'd be on the seller side of it. And if you were a seller and you came to me and say, hey, I like this escrow company, they're not going to charge me anything, I'd call them up and find out, what the deal is, if it's going to work, and I'd give you my feedback. And if it looks good, then hey, let's well, we don't want to test it, but we would make sure that they hopefully perform as they said they would, and also look at their credentials and make sure they're properly insured, properly bonded, properly licensed, all of that fancy stuff. So that's escrow. So as one of your buyer costs, you're paying your part of the escrow fee, which could be 1%, also known as 1 point. Point and percent are synonymous in the world of real estate. And that's one of them. Number two, that second fee is going to be your part of the title insurance fee. Now, the seller's paying theirs just as they're paying their half of escrow, or their part of it. On your side, you'll also pay for that. What is that? Well, escrow, as you know, I'm going to talk about title. I just forgot to mention this. Escrow is going to be that third party entity that takes care of the paperwork. They're watching everything. Usually the funds get there as far as deposit go. They're going to be holding that. And the deposit is that handshake that's required to purchase residential real estate. Shows the seriousness of the buyer. Typically, that deposit isn't collected, of course, until after escrow is actually officially opened, and your offer, of course, by that time has been accepted by the seller. There could have been probably some negotiation that took place prior to that. That being the case, now you have that entity that's controlling that part of the game. That's going to be escrow. Title insurance is a different thing. Title insurance is going to basically being responsible for ensuring that the property is free and clear on title of liens or any issues that could affect the safe transfer of that property to the new buyer. And sometimes this pops up when I'll take a listing. For example, I had it a couple weeks ago, took a listing in Chatsworth. And when we ran preliminary title, which was done at the very beginning before anything really happens, there was a mechanics lien on there via some kind of a business dispute that actually occurred with the prior owner than the one that wanted to sell. And apparently it was filed after. How he did it, I don't know, but the fact of the matter is it's there. So it has to be dealt with. So it's good that the buyer had that title insurance for back in the day, because they were able to use that to clear up that. Now the seller. And now the seller's able to clear that up and now move forward with the sale. It took a couple weeks. LA County is a little bit different as far as speed goes. They're still doing a lot of the COVID mandates and so on. But that's the other thing. So there you go. You got title insurance. And then the third and final fee, this is the wild card now, is going to be the lender. What's the lender charging you to originate or give you that money to buy that house? Usually the lender, they'll talk about their direct lenders, their mortgage brokers. These are terms out there you'll see. When you walk into your bank, you'll see a lot of beautiful advertisements, a lot of happy people running through grassy fields with large houses in the background. That's going to be trying to tell you, hey, I'm your bank and I actually can loan money if you want to buy a house. They'll also do a lot of refinances at wherever you bank as well. What's the best choice? Well, it's kind of going to depend up to you. I'll tell you this, when you have one bank that only can borrow money from, well, themselves or that one bank, a lot of times there's not the nimbleness that you might see if you hire another entity known as a mortgage broker. So here's dad coming back into the picture, and I often say this on my shows. So dad pops back in, he says, I'm not going to pay some middleman to handle a deal when I can go directly to the source. So that's good. Dad gets it. And that's what mortgage brokers typically do. They're going to charge you a fee, just like your bank is going to charge you a fee, just like your credit union is going to charge you a fee to give you a loan. The difference between banks and credit unions, usually, for the most part, they can't borrow money from multiple sources. They're with their own money. And that's what you get with a direct lender. Mortgage brokers, if they're very well to do and they've been in the business a long time, they're also direct lenders. So know that. But they can also access 200 different sources of financial or money to purchase houses to finance residential real estate. So there's a lot of movement there. There's a lot of nimbleness there. Nimbleness. We'll work on that. But you want to interview a couple. So I would just go to your bank. Try to be weary of giving up personal information. I know they're already going to have it in their file. They probably already have you screwed into some kind of maybe a credit reporting program, and they probably send you some kind of an update that might say, oh yeah, Connor McIver, you're good to go. You have this wonderful FICO score, and if you ever wanted to buy a house, this would be your rate today. And they try to tease you in. So they might already have it. You don't want a lot of people out there with your personal information, your social, your date of birth, all of these other things, because they're going to use that information to run your credit. I think the fewer, the better. But again, you do want to interview a couple. So what I tell my clients, start with your bank. After you get done with your bank, then use maybe one of the people that I would recommend because they've served my clients well in the past. And I'm sure they'll do the same for you. But at the end of the day, that's closing costs. So you have your part of escrow, your part of title, your lender's fee, and I'll give you those questions to ask your lender to make sure you're, at the end of the day, getting your best deal when it comes to closing costs because you are paying that fee. Now, when you're buying real estate, I'll throw this out as well. There are several things that you don't get back if the deal doesn't close or if you choose to cancel escrow. One of them could be your deposit. The deposit is otherwise known as that handshake. Back in the day, we're a couple farmers and we're hanging out. And you say, Clyde, I really want to sell my farm. And I say, well, Stan, I'd love to buy your farm. Clyde says, Stan, I'd like to sell it for $100,000. I said, well, Clyde, I was thinking that'd be a fair deal. So then we shake. There's our deposit back in the day. Now, for Clyde and Stan, they have to go and they have to inject money into the process and say, hey, Stan, I really want to buy your property. Well, Clyde, I'll sell it to you for $100,000. But I want to know you're serious. So instead of us spitting in the hand and making a handshake deal, let's go ahead and you give me $3,000. And if that's the case, that'll be your deposit on the property. I'll hold it so nobody else can get it. And I'll let you do whatever your inspections and things you need to do. And the end of 30 days, you give me the rest of the money that we demanded. So another $97,000, and you got yourself a house. That's if the price is $100,000, and if your deposit with Clyde or Stan, I just forgot who was who, ended up being 3,000. So that's something to know. So that's how that works. And today those deposit amounts are in the realm of 3%. So you can do the math on that. That's quite a big chunk of money. But if you cancel escrow and you've removed contingencies, i.e., basically told them that you are willing to forfeit your deposit if you cancel after that point, then you could not get that back. Usually cancellations happen prior to those dates, but it's going to be hard to say. It's going to be all up to the negotiation up front. So make sure your agent explains that to you so you're not flying dark, not knowing where you're going to be or even where the horizon is in the transaction. You want them to sit down like I do with my clients and cover all of that. So you have that part of the process having now been covered, at least a little bit. There's a lot more to that. It's like the proverbial iceberg, if you will. That's only the tip of the transaction. So the other fees that you're going to be coming up with that are cash on demand or payment on demand, maybe Venmo if the sourcers or the entities have it, the people that are providing these services, you're going to want to hire a termite inspection company. You're going to want to make sure the house is termite free, or if it isn't, what the damage looks like and how it can be remedied. And then if you want to negotiate that, your agent should be able to negotiate that quite successfully with most sellers, even in a super hot today market. The other thing that you're not going to get back, and that's usually about $100 fee for a termite inspection company to come just look, to inspect, to write up a report. The other one's going to be a home inspector. That's going to be very, very important. In fact, the home inspection companies, there's quite a few. You want to make sure they have the proper credentials, certificates, certifications, and the bonds and insurance prior to hiring them. There are some companies that they run it like a mega company. They have trucks, they have all this stuff, they have a lot of different inspectors, and they're the singular local business owner type home inspectors. They're the one man show or one woman show. They'll actually are one person show. There's a lot there, but that's who they are. So now they're going to be coming out to the property. Typically they'll be doing everything. They'll be billing you at $500 to $1,000 depending on the size of the property, and then they'll be creating that report usually same day or next day, so you can use that report in the negotiation of any kind of repairs. But that report is paid for at the time service has been rendered. So those are two. And then you got the appraisal. Appraisals can run 500 to 1,000 to even more depending on the property and the complexity of it. So that's the other thing that you're going to be out of if you happen to cancel escrow at some time in the process. And that those fees are not included in closing costs. So these are extra cash on demand fees. The closing cost fees, those come out through the escrow process and usually are paid for via check or some other way in the process. And sometimes people just let it come out of their deposit, but it just depends. So on top of that, you have your down payment, of course, even added to that to be injected into the transaction at some point. I hope this helped give you a little bit of a preview if you are considering buying real estate. I'm going to go ahead and pull up the local multiple listing service, or we're going to run through the data just looking at listings. I know we've over doubled our inventory in the last, we've doubled our inventory in the last 2.5, 3 months. And that's, I know, driving some folks crazy out there because you had sellers that were in like the perfect position to sell their property for the highest amount of money. And now we're starting to see those prices not being as high as they were. So we're watching as the market's starting to flex a little bit and starting to slow down. So I have this search saved. It's something that I put together. Basically, it's every city in the Santa Clarita Valley, and it's the local inventory. So what I did, just so you know where we're pulling the data from, because when I give you this number, you're going to go to Zillow or one of these other systems and you might see everything that's for sale in Santa Clarita, and you're going to get a massively high number that's been designed for your pleasure, if I may. In this case, this is actually the MLS data. These are active and coming soon listings, and that is it. And the property cities that I chose altogether, first let's talk about the type of property: single family residences, condominiums and townhouses, duplexes, quadruplexes, and triplexes. So you might wonder, condominium and townhome, what's the difference? The difference is townhouses are multi-story. Usually they have a garage kind of attached, but at least it's multi-story. Even in the multi-story configuration, it could be you just have the entry level on the bottom, walk up a flight of stairs and get to the living area. Townhouse. That's what that means. Condominiums, and usually with townhouses, you usually don't share. You might share a wall, but usually not ceilings or floors. And you might share multiple walls. It just depends on how it's put together. Condominium is going to be like a rectangular box or an apartment, usually just one level. Well, it's going to be one level. And you're going to share multiple walls typically, unless you're an in unit. You might share ceilings and floors as well. And it's going to be just basically a rectangular box with everything configured inside. That's usually more of a condominium. Now, townhouses and condominiums, they both have the homeowners associations for the most part, because usually there's green belts, there's activity centers, rec rooms, swimming pools that have to be maintained. So they have to get money for that. But that's the properties I pulled here. And for the cities, I ran through the entire Santa Clarita Valley. So the cities specifically are Castaic, Canyon Country, Newhall, Saugus, Stevenson Ranch, and Valencia. So I put all those together in that same search, and it's going to be all active and coming soon listings. And drum roll, please. Now it's going to pull up 535 active and coming soon listings on the market in those cities: the Castaic, Canyon Country, Newhall, Saugus, Stevenson Ranch, and Valencia, and all residential. So if you look this up on some of the syndication systems like the Zillows, the Trulias, the Realtor.coms, you might pop in with 1,000, 1,500. They're pulling in data from listings more than likely that are currently in the process, active backup listings that are not for sale any longer because they're in escrow. So they're giving you data that's not active only or coming soon and active only. In the coming soon realm, there's 17 properties that are currently coming soon. Usually that's going to be a week or two. They could take all the way up to 21 days to have that property enter the market as being active and for sale. So that's something that you're going to want to check with your agent with. And if you happen to be on a search that I set up, I'll explain to you how my process works when you get those listings, then how we're going to process those and the further research I'm going to conduct. In addition, something that you want to be aware of in Santa Clarita Valley, seller or buyer, if you have Mello-Roos attached to a property, that's going to be something that's starting to be more and more accepted, but it's still, a lot of people still have issue and would still rather buy something that does not have the extra Mello-Roos tax on top of it. And the Mello-Roos tax pays for things the builders didn't. So it passes on to each individual homeowner. Usually newer housing has it. It just depends on who the builder is and if they're going to pay the Mello-Roos up front. But the Mello-Roos can be as much as double taxes. Double property taxes, and property taxes for Lake County are approximately 1.25%. Yeah, that number's up and down a little bit depending on where the house is located, but it could be paying double. We have a few different areas out here, Tesoro de Valle having some properties that have that double property tax, and it's substantial, and you're getting that bill twice a year. So just know it exists. If you're a seller, we'll have to sit down and have that conversation, because you need to know kind of well, where you should be priced and how much that Mello-Roos could impact you. And as a real estate buyer, that's also a really good discussion I have with my clients when we're looking at properties with regard to Mello-Roos. I do have that discussion and say, this is probably what you're going to face in the future when it comes to resale in this market, because the market's so robust and hot. Even still, Mello-Roos does have an effect, but not as big of an effect as it may if the market starts to slow down more than it already is. I'm Connor McIver, Connor with Honor. It is a complete pleasure. Thanks for watching this weekend update for Santa Clarita Real Estate. I will be with you next week. We'll be Connor with Honor, yours truly. We'll be taking you through more real estate adventures, and I hope everybody has a great weekend. If you are out there and you're ready and you want to get that list of open houses, go to SantaClaritaOpenHouses.com and fill out that form. That's mine, and I will be more than happy to take great care of you and get you the open houses that you want. Everybody have a fantastic rest of your week. I'm Connor with Honor. Over and out.